Back with closing trades right here on ET now. Just taking stock of what the closing trades are settling in at, while of course, ahead of the trading holiday tomorrow on account of the BMC elections, it's getting a little rough out there. Look at individual names like HDFC Bank, for instance. It's been quite a slide for HDFC Bank, and that's quite reflecting on the way the Nifty as well is panning out, which has knocked off about 100 points on the Nifty, and HDFC Bank now at 920 through 23, which is at the session lows. Look at a TCS. That's been quite a grind for TCS. It's almost headed in for a 3% decline. Asian Paints is down 2.5%. Sun Pharma, Unilever, Maruti, and Eicher Motors, L&T. Even though the management set out those clarifications, the stock lost about 3% yesterday. It's down another 1% in today's trading session as well. And that's the case with even resilient names from yesterday, like in ICICI Bank. That's also down 1%. Cipla, Nestle, Wipro. Infosys down 0.7% ahead of its numbers. M&M, Trent, Shriram Finance, Bharti as well lying absolutely quiet as we speak right now. But let's welcome on board Dipan Mehta from Elixir and figure out what he's making of the market right now. Dipan, hi, afternoon. Good to be chatting with you. Dipan, what's spooking the markets? Seems like the markets are a little derailed with the labor code adjustments, which we got a glimpse of in TCS's performance.
Yeah, good afternoon. Even I'm perplexed, I was so positive even from the Diwali time and then the New Year as well. And I thought that the earnings season will bring good tidings. But it seems that, at least for the time being, I'm proved wrong and markets are correcting. But look, that's the nature of the beast. You can't really understand and explain every short-term move. All I can say is that the fundamentals remain strong. And I'm hopeful that this earnings season will turn out to be one of the better earnings seasons we have seen in the last 7, 8 quarters or so. And it should be the beginning of a fresh rally upwards beyond the earlier highs. And the earlier highs have not been crossed decisively. And I also think that this year may be a great year for portfolios and overall broad-based market moves. So I remain convinced of the positivity in the market. But for the timing, I think we have to live through this kind of slight turbulent phase.
You making of markets? Akshay? Okay. Akshay Bhagwat, Senior Vice President, Derivatives Research, JM Financial Services, also joining us this afternoon. Akshay, what are you making of markets? Believe you're on mute, Akshay.
Good afternoon.
Hi, good afternoon.
So the key ingredient for the market currently is the volatility index, which has spiked up in the last 4 to 5 trading sessions, and it will continue to move up as we head into the budget. But with a key US ruling today evening, I think we are trading at a very pivotal level of 25,700. So from here, it's more of a make or break level. But as the data stands positioned in the market, it's on the negative side with FIIs heavily on the sell side. So I would be bearish on the market till it trades below 25,850. And with the breakdown, if it sees below 25,650, I think we are probably heading for levels of 25,350.
HDFC AMC's numbers also coming. We had a gross numbers also which came through. Dipan, how would you play AMC's financialization of savings?
I think they're a good story, but my preference is for the wealth management companies. We saw what numbers came from Anand Rathi Wealth, richly valued, but nonetheless, I think the numbers are coming through. And then there's, of course, 360, which is 361, which also is looking quite interesting. So like that, I feel the wealth management companies and there's a mutual fund distributor, Prudent. I would go with these kind of names rather than the AMCs where the competitive pressure is very high. And time to time, there is interference from the regulator in terms of pricing and commissions and AMC fees that they can charge. So I would prefer to go with someone which has got a far more flexibility in their business model and in a way which are kind of diversified, so they're not totally focused just on equity. And that would be a better way to play the financialization of savings. There are also the stockbrokers, and particularly impressed with what Grow has achieved and going forward how they can diversify their product basket. That also is a nice play on the financialization of savings. So I would prefer to play it in different names rather than the AMCs, although I would remain invested in the AMCs, and I do expect that this will also be exceptionally good for them.
Why is HDFC AMC flying? Well, the expectation was that revenue will come in at around 1,075 crore. That's come largely in line with estimates. I'm talking about revenue from operations. That's the total income number flashing on your screen. That's something to keep your eye out on. But you look at profit after tax, it was expected around 725 odd crore. It's come in at 770 crore. That's where the beat has come from. So operational efficiency playing out very, very evidently on those numbers, and as a result of that, stock perked up 3% in trade. What we'll do is step into a very short break. Thereafter, we'll take a technical view with regard to HDFC AMC. The kind of move on the stock is decent. On the other side of this break, stay with us. Of course, we've taken a check with regard to HDFC AMC. That stock is up now 3% in trade. Akshay, do you have a view with regard to HDFC AMC in particular and the kind of move it's making?
For HDFC AMC right now, it is the news, the results, which is playing a sentimental impact on the prices. What I understand overall, technically, still it's in a negative uptrend. It is initially in the process of charting a support zone around 2470 odd levels. Too early to comment, but as it stands on the intraday front, 2500 is the trading support. And for change of trend, the levels of 2650 has to be taken out. So expect choppy or volatile moves between the range of 2490 to 2600. If you are invested, hold with a stop loss of 2450. That's the recommendation, but no fresh buys recommended at the current given prices.
Look at a Tata Elxsi. I mean, to think of it, it had a neutral set of earnings, right? But that stock as well is struggling right now. A good 4.6% lower. I can see even an Emphasis, that's also down. Though I think names like KPIT, etc., were still holding out, at least the last time I checked. Don't know whether that's also caved in or not. And Infi ahead of its numbers as well is a bit of a struggle. Dipan, still avoid IT? What's the take? Even though it's turned out to be a good tactical call and a good, sort of bottom-up trade?
No, I'm getting supportive on the IT sector and getting gradually positive. And I think that eventually the kind of AI revenues that these companies can generate will lead to a next growth phase. I'm not sure that can lead to double-digit growth rate for the IT services companies, but a lot of mid-cap companies, I think, will be able to ride this AI wave. Already in Tata Elxsi's numbers, we have seen that the vehicle side, the automotive vertical, there these SDVs, that is basically vehicles which drive by themselves, those projects have restarted, and that has been a good growth driver for the company. So I'm getting incrementally positive for IT services companies, and they have been laggards for the last almost 1.5 years or so. Valuations are reasonable. People are invested in it. So in a way, there could be some short positions also. And eventually base effect also will come into play. So I'm positive on IT services. I would like to be overweight within that sector. Of course, one has to go stock by stock. But I think if you want to play safe, then the large cap IT companies are pretty all right. Now take the case of TCS. I think 6% is coming from AI, and they're having 16% type of Q on Q growth rate over there. When that number goes to 15-20%, it could be a big, decent growth driver for even a large company like TCS. So I remain hopeful.
Okay. Let's in fact also look at where Infi is concerned.
I think the numbers are predictable, and the more important is the number which is a contribution of AI projects and how they are strategizing for this very major tectonic shift taking place within the industry. So I think it's all about commentary, and my view on software services is a bit of a long-term play. Even if 2026 is not that great and still you have stagnant revenues, at some point of time, a tipping point will come later this year, early next year, when growth rates will certainly improve because of this AI wave. And that's, I think, what I'm basically playing for.
Dipan, curious to know, where do you think there could be, meaningful earnings recovery in this quarter? Any sectors or specific individual companies or conglomerates?
No, actually, it could be across the board. I think, if you look at the entire spectrum, apart from the exporters, which are, focused largely on US market, across the board, industry should do well. I think we've had a great, festive season. The wedding season also has started in true earnest. So a lot of the big ticket items should do well. Auto should do well. Pharma, IT services, if not this quarter, 2, 3 quarters down the line, should do well. They benefit from a very steep correction or depreciation of the rupee as well. Cement also is in revival phase. Metal should do very well because of higher prices. I mean, Vedanta, Hindustan Copper, NMDC, NALCO, all of these should report excellent numbers according to me. So I really don't find any particular sector where there are problems, there are earnings challenges. And broadly, it seems that numbers should look good. I think banks also, whatever we know from the pre-quarter releases, those also have all been pretty decent. NBFCs, you saw Bajaj Finance, what they reported in terms of business done in the December quarter. That was good. So I'm not able to really find out where the earnings growth will disappoint. Look, markets can go anywhere, but I keep my eye on the earnings. And eventually, if the earnings start to pick up, then somewhere the money will come in, if not domestic, then even from overseas, and the market will start to look up.
Okay. Deepan, you'll also have Reliance's numbers, and we've seen a bit of a pullback with regard to the Reliance stock. Some cautiousness with regard to how retail will likely play out. Also, the understanding is ARPUs will continue to inch higher. I'm trying to understand anything that you're being mindful about with regard to Reliance's numbers. What are those key parameters that you would be careful about, Q3 in particular?
See, from my perspective, Reliance is not about earnings. It's about whether it's becoming a holding company or not. And more, it seems that it's becoming like a holding company. And if they do the IPO for Jio, which is what I think the indications are, they will follow it up with retail as well. So then you're going to have holding company discount coming into for these businesses. So I would just wait and watch, be a bit cautious on Reliance. The oil to chemical business, I mean, we all understood it. It's cyclical, it's great, it generates cash flow, but whether you can pay a higher multiple for it. What really excites investors in Reliance, of course, is Reliance Retail and Jio. But then, you cannot directly buy those companies. And it doesn't seem the management wanting to split Reliance Industries so that shareholders get free shares of Jio and Reliance Retail, which is the right way to do, according to me. It unlocks maximum shareholder value. So these are the things that I think investors are facing or trying to collect in their mind when it comes to strategizing for Reliance. But look, their management does surprise from time to time, and who knows, this number could be spectacularly good because it's been a good season for a lot of their core businesses.
Okay, that's that on Reliance, the big one. The numbers, of course, are going to be on Friday, much post market hours. But Dipan, great to have you on the show as always. Thanks for your time. Okay, on that note, let's take a very quick break. Come right back. We'll continue tracking markets on the other side.